South Florida remains one of the most desirable vacation destinations in the United States, with millions of tourists flocking to its shores every year. The tropical climate, bustling art scenes like Wynwood Walls, and premier events such as Art Basel Miami and the Fort Lauderdale International Boat Show draw a diverse crowd year-round. Short-term rentals in this area are particularly lucrative due to their ability to cater to both domestic and international visitors seeking home-like comforts during their stay. Miami-Dade County's recent data showcasing over 22,000 active short-term rental listings in this year underscores this demand, reflecting the market's resilience even in the face of fluctuating global travel trends. The 19% increase in listings compared to 2019 signals strong investor confidence, driven by an influx of travelers post-pandemic. For those seeking to capitalize on this growth, South Florida's distinct mix of cultural vibrancy and natural beauty ensures a steady stream of guests willing to pay a premium for quality accommodations. However, understanding what sets your property apart, whether proximity to South Beach or a private pool, can make the difference between a profitable listing and one that struggles in a saturated market. Market trends and financial prospects. The Florida rental market remains a dynamic and rewarding arena for property investors, despite subtle shifts in pricing. The statewide median rent of $2,500 represents a slight $100 decrease from 2023, signaling a cooling trend in rent escalation. However, this remains well above pre-pandemic levels, offering lucrative opportunities for those in the short-term rental sector. The decline in areas like Palm Coast, where rents fell by up to 11%, highlights regional nuances, with smaller markets softening while metropolitan areas continue to thrive. For short-term rental investors, this environment presents a dual benefit. Affordability challenges for long-term renters create a growing reliance on short-term options for professionals, retirees, and tourists. Southeast Florida tells an even more compelling story. Median rents for multifamily units in 2024 stood at $2,000 in Miami-Dade, $2,100 in Broward, and $2,185 in Palm Beach, showcasing consistent demand across these urban hubs. Miami-Dade, known for its nightlife and cultural landmarks like Little Havana, attracts younger professionals and international tourists. Broward, with its family-friendly neighborhoods and proximity to Fort Lauderdale's beaches, appeals to a mixed demographic. Meanwhile, Palm Beach continues to draw affluent retirees and seasonal visitors seeking luxury experiences. These rental rates, coupled with high tourist footfall during peak seasons such as spring break and winter holidays, make short-term rentals a hot commodity. To stand out in this competitive market, investors should adopt a targeted approach. Properties catering to niche markets such as pet-friendly accommodations, eco-conscious travelers, or families seeking spacious layouts can command premium rates. For example, offering high-speed internet and workspace setups appeals to digital nomads, while gourmet kitchens and private pools attract high-spending tourists. Location remains a critical factor. Properties within walking distance of attractions like South Beach, Las Olas Boulevard, or Worth Avenue are often fully booked during peak periods. With strategic planning, the Florida rental market continues to offer substantial opportunities for investors willing to adapt to its evolving trends. Regulatory landscape. Florida's regulatory environment for short-term rentals saw pivotal changes in 2024, reshaping the landscape for property owners and investors. A landmark bill passed in March aimed to harmonize regulations across the state, addressing the fragmented and often confusing patchwork of local laws. This legislation introduced standardized rental registration requirements, occupancy limits, and reasonable fee structures for short-term rental operators, reducing barriers for new and seasoned investors alike. By creating a more predictable framework, the law has bolstered investor confidence, particularly in regions like South Florida, where short-term rentals are a significant part of the tourism-driven economy. However, regulatory dynamics remain complex. In 2024, Governor Ron DeSantis vetoed a controversial bill that would have allowed local governments to revoke or deny the renewal of short-term rental licenses. This decision underscored the state's commitment to investor-friendly policies, ensuring local municipalities cannot impose overly restrictive measures that might stifle market growth. The veto was celebrated by property owners, especially those in tourist-heavy areas like Miami and Fort Lauderdale, as it safeguarded their ability to operate without fear of sudden regulatory changes. Despite these advancements, challenges persist as debates over housing affordability and neighborhood character intensify. Critics argue that the proliferation of short-term rentals drives up housing costs and disrupts residential communities. In response, some municipalities are exploring additional measures, such as stricter noise ordinances, parking regulations, and taxes on short-term rental income to address community concerns.